Hey everyone, it's Ryan with Stock Investing and Trading 101. I haven't made a video quite as much as I would like to, so today I'm back at you guys with another video. I'm going to be doing a Robinhood portfolio update. I'm also going to be talking about my strategy investing during this possible recession, during this correction period, and in this volatile market, how I am investing currently. So currently, today, we have a shortened week coming up in the stock market. No trading on Friday. Today, my portfolio is up 14% due to some of my holdings going up significantly today. So first, we're going to start with my stock holdings. My current stock holdings, I have 2 shares of Waste Management, which I picked up today. 1 share of UVXY. I also picked this up today. This is a hedge that I'm holding. It's a very small hedge. I'm only holding 1 share. I also have 2 shares of Boeing, which I was actually kind of planning on selling today, and I didn't see that it ended up so high. It went up 20% today, Boeing did. So I probably would have sold if I would have noticed in time, but I'll probably sell out tomorrow, assuming I can get more than $150 per share. Next, I have 3 shares of Las Vegas Sands. I picked these shares up pretty much today, and I think one of them I picked up on Friday. 200 shares of GE. I have an average cost of $7.20. I'm selling covered calls against this position. I'm selling the $7.50 call option. Really, I'm not looking to sell them, but if the calls do get assigned, I'll still make like $100, and I'll get all my money back. I can use that to pick some more shares up or to invest in something else. 100 shares of Kinder Morgan, the energy company. 2 shares of Schlumberger, another energy company. We have 10 shares of Store Capital. So this is a REIT. This is a REIT that Warren Buffett invests in. I have 10 shares. My average cost is about $17 per share. It has a 1-year high and a 5-year high of just over $40 per share. So my average cost is less than half of the all-time high. I like that. I have a relatively low average cost. 100 shares of NEO, 13 shares of Pfizer, which has actually been performing pretty well lately. Looking at the past week, up 7%. 100 shares of MJ, 1 share of CLM, 30 shares of Coca-Cola. This is something that I've been buying lately. I want to build this position up to 100 shares eventually, but I'm looking to keep my average cost kind of below $45, even though it's still at a very good price. 200 shares of ACB, 100 shares of Altria, 14 shares of AT&T. This is something that I've just been picking up and averaging into. I have an average cost of about $29.40. Next, I have 101 shares of Ford, 104 shares of Cedar Fair, ticker symbol FUN. This is up 15% today. This is the amusement park. They're paying a high dividend, which I just got a dividend from them of about $80. And then 42 shares of Realty Income. I got an average cost right now of $52 per share. It's a little bit higher than I would like. I wish I could have an average cost in the 40s. But this is something that I still think I'll make out nicely with my average cost. I kind of plan on selling a little bit of my position, maybe between $55 and $60 per share. But this has like a high of $80 per share. It's an opportunity. If I was able to sell it at $70 or $80 per share, it would definitely be some pretty nice returns. Looking at my options, I have covered calls sold against Altria, Kinder Morgan, MJ, Fun, ACB, and 2 contracts for General Electric. These are covered calls, meaning I'm selling these using my 100 shares as collateral. Then I also have a couple of debit spreads. I have a debit spread on UVXY and a debit spread on TQQQ, which is a leveraged bullish NASDAQ ETF. So that's my current Robinhood holdings. It's been pretty volatile on Robinhood. especially certain stocks like Cedar Fair has been extremely volatile. Kinder Morgan went from $21 per share down to $14 per share, which is on the high end. It went as low as I think like $10, $11 per share. So that's the current portfolio, and my kind of current strategy is obviously I'm looking to buy as low as possible to get the highest yield on cost, to get a nice dividend yield, and I'm also focusing on dividend paying companies, and if they don't pay a dividend, I think the only company I'm holding that doesn't pay a dividend is Boeing currently, UVXY of course. We have NEO, which is a speculation. I'm selling covered calls against it anyway to lower my average cost basis. Other than that, and ACB, along with Ford has suspended their dividend, as I'm sure most of you guys know. But pretty much my current thesis or my investment strategy is to invest in high quality companies. I know there's a few companies in here that aren't necessarily considered high quality. You could look at Ford, ACB, NEO, CLM, MJ. There's actually quite a few companies in here that aren't really the highest quality companies. And to be honest, a lot of those companies I'm just holding because they've gone down so much that I just don't want to sell. I'm not going to sell for a loss, especially if I can sell covered calls and collect dividends and eventually recoup any potential losses. So I'm not going to sell and lock in those losses. I'm looking to high grade my portfolio. I've been buying a lot of tech stocks, Microsoft, Apple, and some Google. I've been buying a lot of tech stocks on my other portfolios. I don't really have too many tech stocks currently on my Robinhood portfolio. This is mainly to sell premium and also a little bit of trading here and there. But right now I'm pretty much set to my whole portfolio is long. I'm just going to collect dividends. Once we do get through this crisis, this recession, pandemic, whatever you want to call it, I think the market is going to have a good chance of rallying. It might take a few months, but I do think that we are getting closer to a bottom. I think we're getting closer to peak crisis, to peak infections, and I think once the numbers show that we have peaked or plateaued, I think that's the point when the market officially makes a bottom. So just to look at the SPY, which is the overall market, it's possible that we already have made a bottom. So we have a current bottom of I think about $218 on the SPY, and we're already back up to $265. So from the bottom, I think we're already up 20% from the bottom, and we're still down about 20, 25, 30% from the top. So right now we're kind of in the middle. I mean, for anyone who's been buying, especially below our current levels, I think you locked in a good price for investment, and I know that I'm extremely comfortable with my current holdings, my current cost basis. I'm really liking my Realty Income and Coca-Cola investment at the moment. I think they're gonna pay off for me. AT&T, I'm also liking having an average cost below $30 per share. A lot of the companies that I've been buying lately, I think I've picked up a pretty good average price, and I'm comfortable with my average price. So that's the video, guys. I don't want to drag it on. I've showed you guys my Robinhood portfolio. Pretty much my strategy is to invest in high quality companies that pay dividends, that can afford to pay their dividends. I'm kind of staying away from certain sectors. I'm staying away from the airlines, hotels, energy. I've cut most of my position. However, I still am holding Kinder Morgan, which is an energy company. But other than that, I think once this market rebounds, anyone who was been buying and investing during this correction, I think it's a great opportunity, and these are the times that wealth is made. For anyone who hasn't been around in the market a long time, anyone who invested during the recession in 08 and 09 usually came out extremely well if they didn't sell. So this is the opportunity that wealth is transferred. Sometimes they call situations like this a transfer of wealth. A lot of people lose a lot of money, and a lot of people make a lot of money. The people who lose a lot of money are people who are selling while the market's down. The people who usually make a lot of money are the ones who are buying those positions and riding the market back up. And this is how the wealth is transferred. This is how investors make money during a period like this. The only thing is, we are looking at an unknown amount of how long this could take until things turn around. It could be 2 months, it could be 6 months, it could be 2 years before the market is back into a strong bull market. However, I have plenty of time to invest, and I'm taking it day by day. I'm not timing every single move. If today's up, tomorrow's down. The day-to-day movements don't really affect me. What I'm doing is I'm self-employed, just trying to slowly invest what I can, pick up shares here and there, and just continue to hold. If anything needs to be adjusted in my portfolio, I adjust it. But other than that, I'm a long-term investor, and I think it'll pay off. So thanks for watching the video, guys. I'm going to be trying to upload more frequently because I've been not uploading as much as I'd like to. But thanks for checking out the video. If you have any questions or things that you would like me to cover in my next video, I'm going to be talking more about technical analysis, trading, and the Thinkorswim platform. So if you have any questions regarding anything like that, or even investing questions, feel free to ask. Thanks for watching, and we will see you guys soon.